This show is brought to you by Asino Resources.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz. It's August 28th, 2019. Well, latest metals prices. Gold is taking a bit of a breather. It's down to $15.37.40, $5.10 on the bid. Silver up 10 cents, $18.26 on the bid. The metals rally continues. I mean, platinum just hit $900 the ounce. Platinum could be the best performing metal. Palladium has been hanging around right in that 1450 range, going up, down, up, down. The other big performer, rhodium, and probably not familiar with rhodium, but if you have a Mont Blanc pen, I think they still use it in the nib to increase hardness. It's used in catalytic converters and a couple of other things, but rhodium's up over $4,000 the ounce, $4,200. Not a lot of industrial applications and very trace amounts at that. Well, speaking of gold prices, where do you think the price of gold is heading? Are we in a new bull market? I would aver yes. Just email me with your opinion, kl@kerrylutz.com. Well, Craig Hemke at tfmetalsreport.com is with us. When we last spoke, Craig, and that was May 30th of this year, 2 days after the price of gold started picking up. Hey, man, you've been spot on with your prognostications for precious metals prices for the year. I mean, I look back at the webinar we did with Oren, and you said 2019 is 2010, and you superimposed the charts, and they were alarmingly similar. So what's happening now? What about your expectations? We've already exceeded your expectations.
Yeah. Well, thank you, Kerry. It's always fun to visit. And you're right. The timing at 3 months ago was exactly when everything started to take off. We've been calling this year to be like 2010 since late last year when, all the sell side economists and analysts were still talking about 3 or 4 rate hikes in 2019. I mean, it was pretty clear, especially after the election, that wasn't going to be the case, that you're going to have failing consumer confidence, business confidence. This trade war, we didn't know it was going to be this bad, but that's also impacting things. And now all of the fiat that the central banks have created for the last 10 years is sloshing around the planet looking for any kind of safety and yield. And you've got now approaching $17 trillion worth of negative yielding bonds, more than $1 trillion in corporates, which is just mind blowing. I've stated since 2016 that negative yields are the greatest fundamental reason for owning physical gold that man has ever created. And that's because you always, from the generalists and from the know-nothings out there, they always say, well, gold doesn't pay a dividend. It just sits there and collects dust.
Right. Yeah.
And it actually has a negative yield, they say, because you have to pay to store it. Well, if you're paying Switzerland or Germany or the Netherlands, almost 1% a year in interest just to own their debt, that makes owning physical gold that much better. And then when you think about the currency that you're owning that debt in, and it's being devalued all the time. I mean, the ECB is about ready to start QE again next month. I mean, all of it just makes just great sense. It's a perfect storm. We almost got there in 2016, but then all of a sudden the economy kind of perked up. And then when Trump was elected, optimism grew. And so the process strung out for a couple of more years. But we knew this year was going to be like this. And now here we are. And as you said, it's already exceeded what I thought would happen this year. I thought this would be the best year for the precious metal since 2010.
You were right.
Silver's not there yet. Gold is. And it looks like maybe there's still more to come.
Hey, well, silver is still going up. Silver broke $18 the ounce yesterday. That was a pretty significant milestone, but really the psychological barrier is $20. The technical resistance point is 21, which is what it hit in 2016. I don't remember if it was you who pointed it out to me, Craig, or somebody else, but silver is the only commodity that hasn't hit a new high in the past 40 years.
Yeah, it wasn't me, but that sounds right. And people should think of it this way too. One, there's a substitution effect that is bound to happen as gold keeps going up. It's like when economists cite the substitution effect, they usually use hamburger and steak as the two things they talk about. When steak gets too expensive, instead of getting fillets,
Chicken.
you get something else, flat irons or something, or you switch to hamburger. As gold keeps going up, people look at it and they go, well, gold's $1,600 and silver's only 18, and I can buy almost 100 ounces of silver for every, I think I'll buy, and that kind of starts to kick in. So that's one thing. The other thing that people need to keep in mind, there are a number of reasons why silver has lagged and why it has gotten as low as it is. And a lot of that has to do with the pricing scheme that's dominated by just a couple of banks. But if you look back in time, you go back to the end of that previous bull market after silver got up to $49 in April of 2011 and gold got up to $19.20 in September of 2011. Both of them went in a range for 19 months. Gold held a level around 1520 to 1525. Right. About 6 or 7 times between September of 11 and April of 2013. There was then a coordinated massive smash on April the 12th, 2013, and Monday, April the 15th of 2013 that wiped out 1525, ran all the stops, and we dropped $200 in 2 days. Okay. Mm-hmm. We just got back above 1525, which is a significant milestone. Now, that doesn't mean we're going straight to new all-time highs, even though the euro, gold priced in euro, gold priced in pounds, gold priced in Canadian dollars are all at new all-time highs, and we're eventually going there in dollars too, but that doesn't mean we're going there tomorrow. My point in telling you all this, Kerry, is that if 1525 was that level that held at the end of the bull market for gold, that same level for silver was 26. Right. And we're looking down here, gold now 1550, and silver just 18 and change. So I would say there's definitely room here with the substitution effect, everything else, for silver to move pretty quickly. We're still going to be fought the whole way by those same market-making banks. But nonetheless, there's a chance that silver could still extend pretty well here in the final 4 months of the year, even if gold slows down a little bit.
Yeah, which, gold has been going up so quickly. Silver is always the laggard in this. So what do you see in here? Like, $25 silver, is that possible?
Well, I had thought when I was writing all those forecasts back in December and January for this year and talking about this being the best year for the precious metals since 2010, I was thinking gold would have huge resistance at that 1525 we just talked about. So my goal for this year was just 1480 to 1520. Mm-hmm. I thought we'd get there sometime in the fourth quarter, and things have moved so quickly, like all that negative yielding debt piling up. That now we're ahead of schedule. So we could go sideways for the next 4 months and still register the best year since 2010, up 20, 25%. And people will be frustrated because, well, God, now gold's not going anywhere. When I looked at the silver chart, I was thinking as recently, until we finally broke out, I thought the gold silver ratio could go to 100 because it was being pressed into such a tight corner. But there were 3 really key major lines of resistance between about 16 and 17 that had contained price either all the way back to 2013 or as recently as 2016, these trend lines and moving averages that had contained price. Well, we blasted through all 3 of those and completed the third one 2 weeks ago. So now silver looks to be breaking out too. Getting above 1820 is the first big target. That was the low from the summer of 2013 after that breakdown occurred. So getting back above 1820 is important if we can hold there through the week. That sets up a run to 20 and 21. And then beyond there in stages toward 26. I don't know. Again, it's hard to say how quickly it can get there. A lot of that's going to depend on gold and how quickly the Fed continues to reverse and all that stuff. The next Fed meeting's not for another 2 weeks. So
it's right around the corner here.
I mean, God, that's an eternity, Kerry. God knows what can happen between now and then.
And you said they were going to be cutting rates. You were like ahead of the curve on that one.
And they still don't have any choice, Kerry. The 2-year note is at 1.5%. The 10-year note's at 1.45. So that's inverted. I mean, all of this is signaling recession, but and just on its face level, even after that 25 basis point cut a month ago, Fed funds are still 215. Yeah. The 30-year long bond is 195.
Correct.
The 2-year, like I said, is 150. So the Fed actually has to cut 75 basis points down to 140 just to reestablish, a flat yield curve, flat to slightly upwardly sloping. They're not going to do it. They'll maybe do 25 in 2 weeks. The bond market will accelerate away from them again, and they're going to still owe us 75 basis points trying to catch up.
Yeah, which makes it a great
really
arbitrage.
Bodes well.
Yeah, makes it a great arbitrage. But the concept of negative interest rates is really highly deflationary because it's destroying money. It really is. And this can only lead to a major credit crash, credit bust, if it's adhered to for any amount of time, which explains why the EU has had to print more money every month under their QE.
Kerry, they're going to start more QE in September, and they're going to print more euro, and they're going to buy more of these negative yielding bonds, which is like you're printing euro for liquidity and inflation, but you're buying these deflationary bonds, where the interest is pulling money in and retiring money, if you will. It's crazy. It's madness. And that's why it's not going to stop. This is all part of the terminal part of this Keynesian experiment, as we've called it for the last 10 years. Yeah. It's madness. It really, though, again, I just can't stress enough the positive fundamental that creates for physical metal ownership, because physical metal is money. It has been for millennia. If you're treating fiat currency as money, and your fiat currency is being devalued, at the same time you're paying your bank or your government, you're paying them to loan them money. That's a double whammy. For why would you not then save in gold or silver instead? And ultimately it gets down to how this all plays out and why prices are going so much higher. And maybe that's the next thing we should cover before we run out of time.
Yeah, we should. I had a guest on, Peter Hugg. His call was 1550 by the end of the year. Had somebody else on 1800. I don't pretend to know where the price will be. Yeah. I just think it almost has to go higher here. So, and then, the stocks have yet to reflect the full impact of these higher metal prices.
FSN Radio. It's all about what's next.
Be sure to take a look at Ross Beatty-backed Osino Resources, a gold explorer in mining-friendly Namibia. Osino's district-scale land package is near 2 producing gold mines. Osino's management team previously developed and sold one of them to B2 Gold. Its founders and management are experienced mining professionals. In the past 7 years, they successfully developed and sold 2 companies. Osino's excellent shareholder base includes Ross Beatty, owning 20%, insiders at 5%, and resource capital funds with 8%. Drills are turning, exploration is ongoing, so you'll definitely want to pay attention to Osino. It trades in New York under the ticker symbol OSILF and in Toronto under the ticker OSI. Find out more, go to OsinoResources.com. That's OsinoResources.com.
The Financial Survival Network. It's all about what's next.
Right. Look, you and I have known each other since 2013. Mm-hmm. So my deal. I'm just a dope with a MacBook out here in the middle of nowhere, that runs a website and has, and I've just got the ability to observe and learn and now some wisdom of experience and all that stuff. But I'm not even going to pretend to know as much as people that have already made billions, right? And Correct. So I have learned 2 very important points that people need to know going forward. And I've learned them from Eric Sprott, who, how can you argue with what he knows? And then Rick Rule, who has always worked with Eric at Sprott and Sprott USA. So let me lay these 2 things on people, because this is important stuff that people need to understand. If we're right, okay, and the global economies continue to slow, and the central bankers are unmasked as charlatans, and all the lies they've told over 10 years about how things are going to go back to normal and all that kind of stuff. Interest rates keep going more deeply negative, and the gold and silver prices keep going. It's not that you need to time the market. You've got to just get in, buy the right ones, and hold them. And there are a couple reasons why. What Eric Sprott taught me was that in the early part of a move, it's the really big companies, or the producing companies at least, that really take off first. And we've not seen this. Yeah, the GDX has gone from 20 to 30. Okay, that's 50%. But the earnings of these producing companies in gold are about to grow by 3 times. And the way Eric put it is, if you're making, if you're all costs, everything, is $1,200 an ounce and the price of gold is $1,300 an ounce, you're making $100. But at $1,500 an ounce, you're making $300. Your earnings just tripled.
Yeah.
And so if you're a money manager, if you're, a hedge fund manager, if you're whatever, and you're looking at the general stock market and these mining stocks keep showing up on your screen for the way their earnings are taken off, you got to get in. You're looking for that alpha, that you can charge your fees on. And so so those move first. And yeah, we've seen some move, but I mean, seriously, if your earnings are going to triple, but the GDX is only up 50%, there's a long ways to go. That's the point number one from Eric Sprott. Two from Rick Rule. And I've heard something like this before from Grant Williams. Over the last 40 years, going back to 1980, the amount of global assets dedicated to the precious metals in all their forms, futures, gold, mining shares, has ranged from 8% back in 1980 to 0.5% last year.
Yes.
The median amount is 2.5%. So if in this bull market and all this stuff and expanding earnings and all this stuff, if we imagine a world where with all this cash that's been created that's sloshing around the planet, creating negative interest rates and all that stuff, these trillions and trillions and trillions of dollars, if some of that money now goes fivefold into the mining sector, the precious metals and all that kind of stuff, 5 times the amount of money there is now, prices are going up. It doesn't matter if the banks are in there, what the banks want to try to do, the manipulators, all that stuff. Shares are going up, the metals are going up, just because you've got more cash chasing a finite amount of goods. I mean, it's Econ 101. And so the lesson to all of this from people who have been listening to you and I for the last 10 minutes, and God, I don't know how you could, but if you have been.
Sometimes I wonder that, Craig.
Then you understand, as hard as it's been for the last several years, if we're right about this, and if the economy is going to continue to slow and the central bankers are just going down this path and we're going to 20 trillion in negative rates and beyond and the deficit's exploding and all that kind of stuff, then the metals go higher and then it begins this virtuous cycle of attracting more and more assets and higher prices. And it's going to be a lot of fun for people.
Oh, God, yeah. I couldn't agree with you more. I mean, look, one company who spoke with Northern Vertex, it's a perfect example because these really one-line mining companies, the easiest financial statements in the world to read. There's very few notes. It's so easy to read them. He's producing 3,000 ounces a month, and he was just turning profitable at $13.50 an ounce. Now he's got $175 more per ounce. His cost did not go up. Nothing went up. So just multiply it. Each 1,000 ounces, he's making 175,000 more. Multiply that times 3, $525,000 a month more, $6 million a year. And the stock doesn't reflect it. The stock's trading at like 25 cents a share. And, the juniors, this is a producer, Craig, hasn't been discovered and has the potential to really just go parabolic.
Right. I mean, back in 1980, my buddy Ned Naylor Leyland, who is a mining stock and precious metal fund manager in London, he put out a chart. I remember seeing this, I don't know, within the last year. We went back and looked at all of these companies from 1979 that right before, in that the last time we went to 8%, went from 30 cents to $30.
Yeah.
Eric Sprott talked about Newmont going from 60 cents to $60. And,
so
and people think, well, that's a mania. That's crazy. How can that happen? Well, it can happen again for the reasons we just talked about. And when you've got, again, all of this money that's institutionally or privately managed, and they're looking for gains, especially if the stock market in general starts to roll over, and they're looking for things to buy. Where are earnings going up? What sector? And again, why are there negative yields every place? Because the EU, ECB, the Japanese central bank, the Fed, the Bank of England, the Swiss National Bank, they've created trillions, 20 trillion, 30 trillion, however much new cash in the last 10 years. And it sloshes around at the speed of light, looking for some place, that it can park. And at least, the old Will Rogers thing, I don't want return on my money. I want return of my money. And they just want something back. Think of those trillions at the speed of light, looking at mining company X, who's actually making $1 a share now, that's soon going to be making $3 a share.
Yeah.
And they want to get in, and then the price goes even higher, and now they're making $4 a share. And so this is I don't know. Again, I could be dead wrong, and who knows? Maybe the global economy, and interest rates go back up, and air gets let out of the balloon, and we go back to 1300. But man, if I'm right, this is a pretty incredible time to be alive.
Oh, I know you're right. Just like I knew it. Look, I went all in 2009, 2010. Like, I didn't even think twice about it. My mistake was I thought that it could only go one way and that the world economy was going to collapse and it was going to be done with. But this, again, we're in that similar situation. No problems have been solved. Banks still in trouble. It looks, many are calling for a major economic crisis in the fall, probably centered in Europe, but who the heck knows? The Chinese banks are all on the rocks. They're like pumping in $40 billion every couple of weeks to their banks. Another one, because they've been making loans that make no sense. They would have been better off making loans here and mortgages in Florida than to these state-owned enterprises, Craig,
Yeah.
Well, buy some swampland in Florida. Don't put it into China. You crazy? So, all these things.
And throw that log on the fire, too, with Hong Kong.
Yeah. Oh, yeah. We didn't even talk about that.
Yeah. So, I mean, you just, the ECB is going to meet in September. The Fed's going to meet in September. All of this is, we're headed back to zero. President Trump, we're speaking here on Wednesday, the 28th. President Trump this morning was complaining on Twitter about the unfair advantage that the Germans and the Europeans have to have negative interest rates.
That's an advantage we should let them keep.
I know. And here's the President of the United States saying that's what we should do too. This is crazy. Where we'll be at the end of the year, where we'll be at the end of the day is getting increasingly difficult to try to say. But I know the trend is going the right direction, and that's why it's so important to be in and time in and not timing. You start trying to time, and you read analysts, that say, okay, the whatever index now is overbought and blah, blah, blah. You never go broke taking a profit, but the problem is you start trying to time things, you end up chasing and, waiting for the next pullback so you can get back in. And in my experience of 30 years, that's rarely as profitable as doing your research, picking the right ones, and then just letting them go.
Yeah. Just let them run. Let your profits run. Hey, don't forget, though, take profits. That thing goes up 3 or 4 times. It's okay to sell half. Think of all the people, Craig, who had Bitcoin at 19,400. I put out a thing like 2 weeks after that, and it was down to 15,000, saying sell half your Bitcoin. Just sell half of it. Because if it's going to go to infinity, so you'll have half of infinity, which still isn't bad. And here, if the price of gold and all these stocks are going to go up to infinity, you'll have half of infinity.
That's exactly
and you'll have
right.
Money.
That's exactly nothing wrong with especially taking your seed money out.
Yeah.
And then you can just let things go. That's what I did with my Bitcoin. In fact, my Bitcoin sell strategy was back in December of whatever that was, 17. Yeah. The day that they introduced the futures, I sold half my Bitcoin.
Oh, that was a brilliant move, man, because that was the beginning of the end.
I didn't. Well, not my first rodeo, Kerry.
Yeah. Well, you've been trading a long time, and you don't succumb to the hype. You have these rules that are based on experience and reason, and you stick to them. That's called the disciplined approach to investing. But I wish I had been so disciplined with precious metals. But even some crappy private placements that I bought like in 16 at the height of everything, they're like way up. I think silver is going to be the metal, but we could be wrong. Platinum might go up way, way more than gold because platinum's suffering from industrial demand because diesels are going out. And when I was in Vancouver, I kept saying, why don't the car companies switch back to platinum from palladium in their catalytic converters? And this guy was very knowledgeable about platinum, and he explained to me that they have to get a bunch of government approvals to go switch back. And they don't want to do that. Plus, they're in the process, whether they've admitted it or not, of phasing out their ICE internal combustion engines. They're going electric. I don't know how fast this is going to be, but the handwriting's on the wall. So they're just content to let it be and not mess with it. And therefore, you have the worst of all possible markets for platinum. You have reduced industrial demand and you have virtually non-existent investment demand. That's why it's been falling. Now it's going up. Right. Investment demand's picking up. Silver, same thing. You and I have talked about this. It's an industrial metal. Industrial demand has been increasing since 2011 when it hit its last intermediate peak of 49.20, I think it was, an ounce. What's changed? In investment demand is less than 50% of what it was back in 2011. Investment demand goes back up to that 2011 peak. Forget it. Who knows what it could go up, because the industrial demand picture has still continued to increase. You know, it's like I said, the fundamental case for gold and silver hasn't changed in the past, really going back to the early 2000s. What has changed, what did change in 2011 was the technical side of the equation. And now the technical side of the equation is coming back in line with the fundamental.
Yeah. And you mentioned investment demand. Here's a real boots on the ground, I guess, real world sense of that substitution effect that we talked about earlier.
Right.
You know the Indians are massive gold importers, right?
Huge.
And
biggest.
Their import now begins to slow as price goes up, because that's how it usually works there. But then what happens? Their demand for silver will surge. And watch those headlines in the weeks and months ahead. You're going to get, and the gold will plateau and all that kind of stuff, but the demand for silver in places like India is going to surge, and all of that kind of feeds that virtuous cycle, like you were just saying.
Yep. Well, it's going to be interesting, Craig. So tfmetallsreport.com, tell us why you should join.
You know, I'm sitting here thinking while we're talking, I think this has been an instructive podcast for folks. And I know the holiday weekend is coming up as well. And so I think what I'm going to do, as soon as you have this posted, I'm going to tweet it and put it on my site and all that kind of stuff. But I was just sitting here thinking, I think I'll run a special, because, I mean, there's just no time like the present to get back involved or get involved in the precious metals for the first time. So my site is usually a whopping $12 a month, 40 cents a day. Mm-hmm. To read what we write every day and listen to the podcasts and all that other stuff. But I'm going to set up a coupon code that's going to run through Labor Day weekend. And so anybody that listens to this, if you want to join, we'll make it 50% off your first month. So it'll save you a whopping $6, but it'll make your first month only $6. So 20 cents a day. After that, if you want to cancel anytime, cancel anytime. Otherwise, it'll just renew at the regular rate every month until you cancel. But If you want to join, see what it's all about, be a part of the best internet precious metals community, you go to tfmetallsreport.com, you go to the subscription page, you purchase a monthly subscription, and at checkout, enter the code, we'll call it KERRY, KERRY.
All right.
How about that? So you enter that coupon code KERRY, you'll get 50% off your first month, and then you'll be in the game. You'll be ready to roll for where I think this is headed.
And you need to now more than ever. You've been forewarned. The market has changed. There's no question we are in a bull. Yeah, could we have some pullbacks? We hope we have pullbacks. We don't want to see a parabolic rise that's unsustainable into the future. So anyways, hey, questions, comments, where do you think the price of gold is heading? Email kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network. Craig, we will catch up with you again real soon. Thanks.
Can't wait to see where we are the next time we talk, Kerry. Have a great Labor Day weekend.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.